What's going on, everyone? Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button because NIO is very well documented on this channel. And also make sure you hit that like button because it really does go a long way in helping out the channel. It's currently 6 a.m. Eastern Time here in Michigan, and NIO Stock is currently trading at $15.40. Up 8.37% in the after hours, which comes out to $1.17. Now we can get into the video. Earnings for the second quarter are finally in for NIO. This was a highly anticipated earnings report, and let me just say that they delivered on their expectation. You know, last week I dropped a video for my expectations on NIO's Q2 earnings, and they certainly exceeded them. Before we get into everything, I just want to note that it is 6 a.m. and I do have other things to do today, but I needed to get up early and make this video for you guys. So if you are watching, make sure you hit the like button and make sure you hit the subscribe button so that we can get this video to everybody who might be interested in seeing it. Like I said in my last video, Zach's expected NIO to lose 34 cents per share this quarter. And the general consensus was that they were going to lose 26 cents per share this quarter. Well, if that's the case, then NIO produced GAAP earnings per share of negative 16 cents per share. And what that actually means is that they beat those expectations by 10 cents, which is definitely a big deal. This is a huge jump from last year. Last year in Q2, they lost 45 cents per share. Now for revenue, Zach's expected NIO to do $486 million in revenue this quarter. Last year, they did $220 million in revenue. Well, they blew those estimates out of the water as well. This quarter, NIO did $526.4 million in revenue, which is a 146% increase year over year. The general consensus was that they would do about $501 million in revenue, so they definitely beat this expectation by about $24 million, which is a lot of money. Now, in the Q1 earnings call, CEO William Lee said that we could expect to see 5% vehicle margin by the end of Q2. In Q1, vehicle margin actually sat at negative 7.4%. So seeing negative 5% around this time was something that we would actually be comfortable with. We just wanted to see that the loss was narrowing and they were trimming on that. But guess what? NIO's vehicle margin is actually positive this time around. That's right, it's 9.7%. Last year around this time, it was negative 24.1%. So one of the biggest knocks that the Bears have to us as bulls, NIO bulls, is that NIO is actually losing money on every vehicle and that they're never going to be positive on their vehicle margins. Well, this completely throws that whole convoluted short seller logic out the window. It's Q2 in the middle of one of the worst times for businesses, and NIO actually was able to have a positive vehicle margin. All right, so the next thing I told you guys I had my eye on was gross margin, and this is far more important than vehicle margin. This is looking at the overall business. In Q1 2020, gross margin was negative 12.2%. So we're talking about a business with negative margins. Talking about a business that people said would never be profitable. Gross margin for Q2 was 8.4% positive. Last year in Q2, it was negative 33.4%. This earnings report, to me, if I had to rate it out of 10, it's a 10 out of 10 because the vehicle margins are positive, the gross margins are positive, and the cash flow is positive for Q2. Here's what the CEO and CFO had to say this time around. We achieved a record high quarterly deliveries of 10,331 ES8 and ES6 vehicles in total the second quarter of 2020 and expect to deliver 11,000 to 11,500 vehicles in the third quarter as momentum continues, said William Lee, founder, chairman, and CEO of NIO. The current constraints on the productions will be lifted in the near future, and we are confident that our production capacity can meet the accelerated demand of our models. Beyond the strong order growth, we are proud to reach a milestone quarter with respect to the key financial metrics of the company, highlighted with the historically high vehicle gross margin of 9.7%, lowest ever operating losses, and more importantly, a positive cash flow from operations for the first time in our history. We will continue to focus on improving operating efficiency across the company. Meanwhile, we stay committed to investing in the technologies and services to provide our users with the best products and experience in the future, and to start strengthening our leadership in the smart EV sector, concluded Mr. Lee. With strong deliveries in the second quarter 2020, our vehicle margin significantly exceeded our target of over 5%. Attributed to the increasing scale, higher average revenue per vehicle, reduced material costs, and improved manufacturing efficiency, added Wei Feng, NIO's Chief Financial Officer. Additionally, we have demonstrated our capabilities to generate positive cash flow from our operations. Through the continuous improvement of our operational efficiency and our significantly optimized cash flow management, we will continue to enhance our efficiencies across the company in the rest of 2020 and beyond. That's going to be it for this video, guys. Overall, great earnings call for NIO. I'm going to be excited to see what the stock price does today. And I know a guy with 20K on some options for who needs a $15 strike price. So good luck to you, man. Appreciate all you guys for watching. Make sure you hit the like button. Make sure you hit the subscribe button. Leave me a comment down below and stay tuned for more content.